Anyways, Raul, thanks for joining us. And now I'm not going to let you go without telling me tales from the trading desk. And I figure you might have one or two that you might want to share with us.
Yeah, I'm going to give you two. One I probably mentioned before, and the other is I have never mentioned before, I don't think. So
Awesome.
this is all one guy, and he is one of the most famous hedge fund managers as well. For some reason, I'm still fearful of him to this day, so I won't mention his name. Because he was one of the most aggressive traders and pretty secretive. But and I've mentioned his name in the podcast so far. But anyway, this guy, I never forget. It was 1999 or 2000. I'll start with this story. This is the knock-on effect. Both of these are knock-on effect stories, and the other one is the story of somebody who understands detail, the detail side of macro and the big picture macro. So those are the two big attributes I said. So the knock-on effect story is the UK 3G telephone licenses are being granted to phone companies. The UK is the first country to grant licenses. Now, if you think of what 3G means, at the time it's going from your phone just being able to send a basic text and making a phone call to turning it into, the Apple phones of today. So every phone company knew that they had to do something to do with this. So there was a lot of chatter in the newspapers because people wanted to see how this auction went, who would pay for it, how much they pay. And the UK kind of set a price range. And the whole finance industry thought, they'll have to overbid a bit. But when the auction happened, which nobody'd ever auctioned off a license before, it went through at such a ridiculous high price. And everyone was like, wow, that's extraordinary. That's how much they paid. However, this famous hedge fund manager looked at it, understood what it meant immediately. What he meant was almost every phone company, every country in Europe was going to auction their licenses because it was free money for the government. And they were going to go at such extraordinary rates because everybody had to have this license. There was no choice. So they knew that the price would be extraordinarily high, and he just realized it was going to pretty much bankrupt all the telcos. And that was the end of the TMT, telco, media and technology. That was the end of the telco part of the equation. So he came on and said, and I started with him the entire sector business. You couldn't trade sectors in Europe, but at the time he came on and said, listen, how do I trade sectors? And I said, well, we'll figure it out. We created the sector swap market. It was before ETFs. So in the US, there were some ETFs in the US, but there was nothing really in Europe. So we developed the Dow Jones Eurostock sectors to trade. And he came on and sold $1.5 billion of telco stocks that day, of which nobody had figured it out. I mean, that's a big size at the time. And nobody had figured out what the hell was going on. And he'd just taken the knock-on effect of UK auction, not good for the UK phone companies. But if you're any of these global players like Orange or Deutsche Telekom at the time, they're totally, totally screwed. So he shorted them, and things fell 60 or 70% after that. And that was the start of the end of the TMT bubble. So that was one story.
That's a terrific story. You just get those guys who understand things, and then the ability and the courage to put that trade on in such size.
That's right. And interesting enough, I knew somebody else who'd like this chart, another famous hedge fund guy, and because we're talking about the trades, I try and not say who it was, but a famous guy who's very famous for charting as well. And I just called him up and said, and these two are both friends, and I called him up, and said, very close friends. I called him up and said, hey, listen, look at this chart of the European telcos. I knew that's all I had to do. I said, look at the chart of the European telcos, and by the way, your friend's been selling them. He's like, fuck it, I'll do it as well. And so there was another $250 million out of him. He'd never traded a sector before, but I knew what could get him salivating, and it was a head and shoulders top on a chart that nobody else was trading.
That's funny.
And he didn't want to look stupid because his other mate was taking the aggressive trade. So that's one. So back to the Mr. Aggressive. So this is when he proved to me that he was literally one of the greatest traders I've ever seen. And he's not given as much credit. People don't talk about him as much as I have done. I used to know them very, very well. Their firm, they were by far the biggest client of mine when I was at Goldman Sachs. And it was the Asian crisis, and everything is going. It was an extraordinary time, and I was at Goldman Sachs, basically controlling the order flow for all of the largest hedge funds in the world, seeing what everybody's doing across the world. It was an unbelievable time. So I get this phone call from this aggressive hedge fund that says, South Africa. I'm like, yeah, sell it. So I'm on the equity derivative desk, running the hedge fund sales business and equity derivatives. What do you mean, South Africa, sell it? He says, just start selling. Slams the phone down. I'm like, okay. And then the line lights up again. Just whatever you do, don't sell futures. I'm like, so he's called the equity derivative desk, but he doesn't want to sell futures. He wants to sell stock. And I said, well, do you want the index? He goes, I just don't give a shit. Just keep selling them. So this goes on every half an hour. His head of trading calls me up, who was another very aggressive guy. He calls me up. He's like, how much you done? I'm like, it's South Africa. I've done $10 million. He's like, come on, we've got more to sell. So this goes on for 4 days of selling every bid in South Africa. And we eventually sell $500 million of South African equities. The market's in free fall, but all of the emerging markets are in free fall. So, it's total chaos out there. So I'm like, okay, fine. I don't know why he's doing it in this sloppy, ridiculous method. We could have done this much easier in futures. Maybe it was $1 billion. It was a big trade in South Africa. So that all goes quiet, and we carry on with the Asian crisis, and things get better, and the HKMA intervene in Hong Kong, and it starts improving a bit of sentiment, and things get better. And eventually, they come back, and he's like, "Buy South Africa." I'm like, "Okay, we can go through this all over again, the other way around." And yes, we do, but a little bit less aggressively, and he closes the whole trade out. So I look at this. This is 3 or 4 months has gone by. So I'm looking at this, and I added it all up, put it into a spreadsheet, added it all up. And I'm like, he made 8%. I'm like, well, what was the point of that? Considering what was going on in the world. So I called him up, said, what the hell was that all about? All of the aggression, all of the thing, he made 8%. He goes, you kidding me? I've made 58%. I'm like, what? What have you done? He said, oh, it wasn't an equity trade I was doing. I said, but you were selling equities. He goes, no, you see, there's 2 currencies in South Africa. There was the financial rand and the commercial rand. One had the interest rates were 27% because everybody was trying to break the currency, and between the two. So what the
he was
onshore
creating
rand,
a credit.
yes. So the onshore rand was trading, at very low interest rates, and he figured out he could basically get onshore rand by shorting equities because the stock borrow was 0.5%. So you short the equity, you get a pile of cash.
That is a great story. That is awesome. Like, that is really just shows the next level thinking, doesn't it? Like, just that He's just in another league.
Correct. I mean, that was extraordinary. I just felt stupid. Nobody else had figured that out. He didn't tell anybody, and nobody figured out what he'd done was a way to get round the problem of high interest rates. Because the story of the Asian crisis was, if you didn't lock in your currency forwards, by figuring it out in advance where this was going, you were going to get squeezed out of your trades as they jacked up interest rates. So it became really hard for people. The smarter guys managed to lock all their forwards in, 1 or 2 year forwards, and they could trade it. But if you want to come into South Africa in the middle of the crisis, you're going to have to borrow the currency at 27.5% or whatever it was, unless you figured this out. So super clever.
That is awesome. Well, thanks for sharing both those stories with us, Raul.
Not at all.